Mortgage rates ticked higher this week as the Fed sends mixed signals about whether we'll see a rate cut in September. Builder confidence just hit rock bottom levels. Home prices are slipping in a lot of markets, and rent growth is finally cooling off. So what does all this mean for buyers, sellers, investors heading into the fall? In today's update, I'll break down the Fed's latest moves and what's happening with builders, where prices and rents are headed, and how it all impacts affordability and your opportunities in this market. Hi, I'm Mike Wise with CMG Home Loans with your weekly mortgage update. Let's get to some of the details of the weekly update. So mortgage rates, we're just looking right here sitting at 6.62%, slightly up from earlier in the week. I'll go over on in fact, let's do it right now. We're gonna go over the bond market here and see what's going on. This is Fed Chairman Powell is going to speak in about 20 minutes now from recording this video. And you can see, whoa, it's already moving here. So this was a big move just now we just had. And you can see that right here, we've been sitting at this 101.76 level for a couple of weeks now. Mortgage rates have not gone anywhere. The Fed chairman, he must be talking right now as we do this because it is moving. We'll see this. I'll come back to this a little bit later in the video here. The yield, this is a big move this morning. You can see that it's moving down right now. So we're coming down below these levels. We've seen this is that slight increase in mortgage rates over the last 2 weeks. They went down, but now they've come up just a little bit. If the Fed gives some nice comments here to show that we're going to have a Fed rate cut, we may see it come back down to this 420 level here. So let's watch. We'll come back to that in a little bit here. So before that is happening, the Fed, they were pretty hawkish. The minutes came out from the previous meetings showing that basically the Fed, they're worried about inflation. They're worried about the tariffs and how that's going to impact the numbers. They aren't as worried about the job market, which is really kind of a weird thing. And so I'll show you a couple of those things in just a little bit here. Builders bummed out, right? So the confidence index dropped 1 point to 32 in August of 2025. That's low, really low. They are bummed out. The perspective was the index for most of the pre-pandemic construction was that they were more confident about the market at that point in time. But affordability concerns for tariffs, regulatory uncertainty, and vacancies are starting to build here. And so the sentiment came down. But Warren Buffett, he invested $1 billion, almost $1 billion into the builders, into the home building business because he sees an opportunity. He jumps in when it's not as great, right? Because he sees lower interest rates. He sees that the number of units that we need to build in America for today's population, we're 4 million houses short. And so we need that inventory. And so he sees some opportunity in the builders and what they're doing in the next couple of years. So we'll see what happens to that investment over the next couple of years here. Mixed results from July housing starts. The permits, they dropped 4% year over year. That was mostly single family units there. However, the housing starts, they did rebound from several weak months. They were up 8% year over year. So there's a little bit of mixed results there. Rent growth slows. This is a big deal here. So rent growth, it's slowing. The rent growth slowed to 2.6% year over year in July. And basically, the owner's equivalent rent, this is a big piece of the CPI. It's 41% of inflation numbers, the Consumer Price Index. So this has a heavy weighting on the CPI index. The Fed governors, they're worried about inflation. They're worried about the tariffs. They're worried about what the impact is going to be. They've never been worried, forward-thinking people in the first place, but they've always been looking backwards, and now they're worried about going forward and what's happening with the tariffs and inflation. But the rents coming down, this is going to have an impact on the inflation numbers. You watch and see. We'll see what happens over the next couple of months here as far as what happens to the CPI and what impact that had with the rents coming down. Prices fell in 39 of the top 50 metro areas, but no worries here. It was not a huge deal, down 0.1% month over month. So not a big deal. Average 30-year fixed rate, we already went over that. Okay, Fed meeting, September 17th. Now it's a 73% probability that they're going to drop 0.25%. That may change today, but right now, as we look at this, this is the probability. Remember, over the last couple of weeks, I was at 95% that they were going to drop to 4%. Now it's looking more like 71%. We'll see after the Fed Chairman Powell talks today as to what's going on with those with the probability of the rates going down. But that's right now we're at 71% chance, and that's down from 95%. So we'll see what happens there. Let's see here. So the Wall Street Journal. This is two members here, right? Two members that are basically saying, I don't see it. I don't want to drop rates because I think inflation is still rising because of the tariffs. And so there's two members right there. That's probably why we're going from 95% down to 71% probability of lowering the Fed funds rate. But there's a lot of pressure on Fed Chairman Powell right now to basically cut the Fed funds rate. So we'll see what happens here. In fact, let's just go real quick back to the market here. Still 22 basis points. So that's right where we were earlier. Down 7 basis points. So that went down just a little bit here, one tick. And let's go to, real quickly, let's go to the Wall Street Journal, see if there's anything reporting here. Nothing on the economy, on the, let's see here, economy, and we will check it out here. So there's Powell. he's moving in to Jackson Hole for the big meeting. And so, yeah, this is going to be a big deal. So continue to watch this. It's going to move the market when he does talk, but this is in anticipation of him coming in there, and the interest rates are starting to trend down a little bit as a result of that meeting. So this is Mike Wise with your weekly mortgage update. I will be available all weekend. If you have any questions, please feel free to text me. Don't forget about my all-in-one loan, where you can get interest rates way lower, effective interest rates way lower than what the current market interest rates are. I'll show you how to do it. Just takes cash flow, and we'll get you that lower interest rate. Now is a great time to go out and buy. We'll see you next week. Have a great weekend, and we'll talk soon.